What's good, guys? I just want to make a video talking about how to enter the setups that I talked about in my previous video on how to spot these setups. And I also want to talk about where to put your stop loss, when to take profit, how long you should be holding these contracts, because these are all very important things and these can make or break an account. So let's get right into it. So first up, I want to talk about my entries. 90% of my entries on these swing trades are going to be based off a 15-minute close above the level that I want to enter on. So I talked about in that video that I usually enter on a break of the previous day high. So I'm looking for a 15-minute close above the previous day's high. So if we look on CELH here, Celsius, I got this a while ago at the end of September. So we can look, we got a nice wedge pop setup here. So if we scale down to the 15-minute chart, I'm just going to highlight this real quick. Scale down to the 15. Alright, zoom in here. As you can see right here. So I was looking for previous day high break on the 15. The previous day high was 52.40, let's say. First 15-minute candle closed above, but it didn't exactly break out of this wedge. But because of the wick, I did wait one more second. Then I bought right here on this close because it also closed above this trend line. And it was just a little bit more confirmation. So again, 15-minute close above, and then you set your stop loss to the low of day. And I typically don't get into a play if the low of day distance is above 50%, because then if your stop is low of day, then you're looking at a lot of downside risk when it could just be less if it's under 50%. And if it's over 50%, then you don't have to take the trade, guys. A huge tip is always look for reasons to not get into a trade. Only get into a trade if you have little to no reasons to enter the trade. Obviously, everyone's in this game to make money, but the number one thing to make money is to preserve your money, right? So again, look for reasons to not enter a trade. So after you enter stop loss low of day, where do you put your take profit? When do you sell your entire position? So on this, for example, right off the bat, we had a really strong start, okay? Close above the 8-day EMA, looked good. Next day, huge pump. We gapped up actually, but we filled a little bit or pretty much most of it. And then I actually ended up trimming my position here at the end of the day because great profit, already was good. Now, important here, we also closed above the 21-day moving average. And not only that, the volume was over the volume moving average, so that confirms that there's more volume as well. So after trimming, where do you take your full profit? Now, a big thing with shares, options, a huge rule is you don't take full profit until you get a daily close below the 8-day moving average. So right here you can see, yes, trimmed right here, but you literally could have held all the way up, taken out this previous high right here, trimmed again, or taken full profits. That's what I did. I took full profits at this previous high because that's what I was aiming for. Yeah, there's a huge red day, but we didn't close above the 8-day until today. Again, and you could have trimmed up here as well into this if you held that long. Now, oh, how do you hold contract that long if there's time decay? That's where you get far out expiration. So you give your contracts time. Okay, another great example that I also had is going to be ASTS. Look at this. Similar, very similar setup to Celsius. Wedge swap got in off a 15-minute close above the previous day's high right here. Trimmed on this day. Continued to hold my full position. Why? Because it didn't close below the 8-day moving average here. Even right here, still technically closed above. Then a huge bounce off of it. And then another huge day up. I trimmed. And look at this, guys. All the way up to over $100 share price. So we entered under $50 per share. And because it never closed below the 8-day moving average, you could have had quite literally one of your best plays ever. And again, how could you have gotten this? Far out expirations and holding. Why? Because no close below the 8-day moving average. So technically, my full exit should have been on this day. But I took full profits on this day, I believe. One of these 2 days here. Even I'm still working on doing this because it's so easy to get caught up in seeing the profits and be like, oh, I'm just going to secure the profit now. But this is why you're buying far expirations, guys. Another great strategy is buying shares alongside buying contracts. You go a 50-50 split. Let's say you throw $1,000 into the contract, $1,000 into the shares. You can trim more of the contract and hold on to the shares. Right here is 100% play with shares, and that's very good. Very good return. The percent return for contracts would have been in the thousands, I'm sure. Another good example here is going to be EOS Energy. So look at this, guys. I posted about this on my Twitter or my X multiple times. Way down here, okay? Even sub 5, I'm pretty sure I posted about it. But I've been in this in sub 5. Right here, breakout, okay? This could have been an entry right here, first of all. Now, yes, we had a couple closes below the 8-day. But let's say you weren't in yet. First of all, if you were in shares already, it's not an excuse to get out yet. It's still good. But calls, let's say you weren't in calls yet. I entered calls here, okay? I believe around $7.50. Look at this, guys. Steady climbing. Didn't close below the 8-day moving average until $15.50 per share. Thinking about that. Again, another double in share price with contracts if you held. If you had November 21st calls, one of the best bags of your life with shares and contracts, right? And again, didn't close below the 8-day moving average once after the initial breakout. I can go on and on with this, guys. Now, let's say you did get calls on this initial breakout. Comes up here. First of all, you should have trimmed up here, right? But let's say it closed below the 8-day right here. Technically, you should have closed your position. At least that's what I do, because an example is going to be RGTI. Look at this run up, guys. Breakout right here. Obviously, Quantum went insane, and I know a lot of people that caught this. I unfortunately wasn't one of those people. But again, breakout. Look at it riding the 8-day moving average all the way up from $17 per share all the way up to $58, and it didn't close below the 8-day once until Thursday, October 16th, when it did. As soon as it closed below, look at this, went from 47 all the way down to 36 now. That's why it's good to take out your full position on a close below the 8-day moving average. It can kill momentum. So take a look at Hive. I took my full position out of this right here on this 8-day because it closed below. And of course, look, we're going lower. I got in on this initial break right around $4 per share, calls and shares. Absolutely riding the 8-day moving average, went all the way up to $7.84, and I did end up trimming on this day after we formed this wick around $7.20 per share. Again, that's all you have to do. Just repeat the process, okay? You get in on a breakout if the setup's right. You make your criteria. You get in on a breakout. You hold until price closes below the 8-day moving average. I know people that use the 9-day, the 10-day. Just use whatever works for you. I personally use the 8-day, but I do keep the 9 and 10-day in mind as well. Again, that's all you do. Stop loss at low of day, and then full take profit should be a close below the 8-day moving average. Because if you say you get stopped out on a close below the 8-day moving average, and then the next day it rockets, would have hit your take profit. It's part of the game. You can't hit every single play. Trading is about probabilities, not prediction. So obviously you can't predict every move in the market, but you can try your best to adapt to what's about to happen. Let's take a look at Snow here. This is, again, guys, I'm not perfect. I still make mistakes. Everyone still makes mistakes. Right here, Snow, I bought on this day. Okay, huge wick up, trimmed right here, and I actually got stopped out here. I took my L down here because it was looking like a really rough day, and I just wasn't feeling it anymore. And honestly, it was a little bit of panicking because my overall portfolio was down a lot that day. But look, we didn't close below the 8-day moving average. We wicked back up. Next day, huge pump. And again, I just talked about that. Sometimes that's going to happen, and you can't do anything except accept it. All right? And this actually would have been a good rebuy-in because it broke out fully out of this trend. So you could have bought in here, gap up, and you could have held all the way up until here, which wasn't that great, but could have trimmed up here at this previous high, for example. I also wanted to add previous levels that you should be trimming at due to resistance, right? So right here we have Lunar, and as you see, we had a nice breakout and then consolidation, another breakout. So you could have entered right here, 15-minute close above, ride the 8 EMA, but where should like a good trim be? So me personally, I aim for this previous high right here. Why? Because as there's resistance in the past, there's most likely, or there's a high probability where there's just a chance of there being more resistance at that same level. So as you see, level got hit and we rejected it. So thankfully I trimmed my position. You can also go back farther and see another previous zone right here at about 1280. Could have trimmed right there as well. And you see this on a lot of stocks, right? ASTS could have taken a big trim right here at this previous high. Here's another example of ONDS. So riding the AEMA again, you look back right here, previous level, boom, could have trimmed literally at the top right here at 1075 at 10, because double digits, it's a psychological number. There might have been some resistance there, could have trimmed. So you want to trim into strength. Okay, you want to trim into strength, and usually if it closes below the 8-day moving average eventually, that might be closing into weakness, but hopefully before then you're trimming into strength, right? So like right here on this day could have trimmed Y strength, but because it just bounced off the AEMA, it could have been a good idea to hold for continuation, and that's exactly what happened. And another great thing to note is when a stock is getting extended from that 8-day moving average or any of the moving averages like this, expect a pullback, because it can only get so far before it has to pull back. All right, so keep that in mind. This is a crazy stock that went crazy, Beyond Meat. Pay attention to this. Again, super extended from the moving averages. They opened up at about 618. Huge gap up. Whenever there's a huge gap up, or it's just super extended from the moving averages, it's always a good idea to take profits, trim, even sell the full position because of something like this happening. Now, this was a full meme stock, but stuff like this can happen as well on actual stocks if they gap up. So again, you want to trim at previous levels that you might see some resistance at, and full profits at the 8-day moving average. So yeah, guys, that's pretty much it. It's not a super long video. Again, for me personally, it's a 15-minute close above previous day's high usually, or above a previous level. Stop at low of day, and if the low of day distance is above 50%, but the trade still looks good, then I'm just going to set my stop loss at a previous level that makes sense, that won't kill my account if I get stopped out of that trade. And again, you just continue to ride the 8-day moving average. And if you get stopped out, you get stopped out, guys. There's always going to be more opportunities. And that's also why in my last video about how to find these setups, you always buy far out expiration. At least a month out. You will thank yourself, guys. And another reason why swing trading is literally just better than day trading. Imagine only day trading this move, this move, this move, this move, this move. I mean, really? Or a great example, if we go take a look at gold, okay? Imagine only day trading these moves when you could have bought at the end of August and held all the way up to 300 to 400 per share. So yeah, that's going to wrap up this video. Let me know what video you guys want to see next. My bad I haven't posted in about 3 weeks. I've been pretty busy with posting TikTok, which if you don't follow me on TikTok, go follow. I've been posting a lot of futures highlights and tips and tricks for futures. Let me know what video you guys want to see next. Comment down below what your strategy is and what stocks you're looking at for the rest of this week. Thank you for watching. Peace.